Alok Tandon, CEO of INOX Leisure, now joins us. It's so good to connect with you, Alok. You have been able to maintain your F&B margins despite a full impact of the F&B price realization in states like Maharashtra. Will this remain as a key contributor, and what is your outlook for F&B revenues in FY20?
We all know that we Indians love our movies and we also love our food. And talking about food, we have done a lot of innovative things. We have made new recipes, we have designed new menus, and ensured that people get the best of food at INOX cinemas. Talking about revenues, yes, we have seen an upward trend in the growth where food is concerned. Y on Y of Q3 of this financial year, we have shown a 45% growth in food revenues. And I feel that the way we are innovating our food, the growth will continue. And yes, we are very, very cost conscious. So we are taking care of our cost of goods. We are ensuring that more food is sold by having a point of sale where a guest stands so that he doesn't have to stand in the line. And looking at all these factors and the way we have designed things, I'm very confident that the food growth story will continue at INOX.
Right. So you're now present in about 67 cities, if I'm not mistaken, with a good solid 137 multiplexes, 563 screens. What's the outlook on screen additions? Are you sticking by, or are you upping your FY19 screen addition guidance of 81 screens?
Well, you're right. We are present in 67 cities as of today. We have 137 multiplexes with 563 screens as we speak. And the guidance of opening 80 to 81 screens in this financial year, we are hopeful to do it, and because we've already opened 74 screens till today. Hoping to open another 8 or 9 screens in the next coming days. And we have got a very robust pipeline of cinemas which are signed with us. We have documentation done for about more than 840 screens. Hopeful that they'll be open soon. And our target is to open at least 7 to 80 screens every year going forward. Where the capex is concerned, we spend about 2.5 to 3 crores per screen. And that's a ballpark figure which I'm giving you. Could be more in certain locations and a bit less in a few more.
So, you know, analysts are seeing an increased margin on account of expected advertising revenue growth, which was set off by disappointment on the convenience fee front. What is it that you're penciling in for margin trajectory?
Well, advertising is a core component of our revenue streams, and we have ensured that the revenues from advertising keeps on growing quarter on quarter. We had a great Q3 where we had a 38% increase in advertising revenues. And there are various factors to it, and including one, that rigor which we have of go to the market rigor, combined with our sales team sitting with various advertisers and media managers and devising the strategy to sell the advertising space. And today I can say that we are not just pure sellers of space, but we are the people who sit with the teams and devise various strategies to advertise their products. We have an innovated, integrated approach for an ad to be shown, and what we feel is if a particular ad is shown on a screen, it should be seen, touched, felt in the lobby. So that's what we are working towards. Where margins are concerned, yes, most of the monies or most of the revenues go to the EBITDA and straight to the bottom line. And with our renewed focus on advertising, I'm hopeful that this will continue, and we'll have some good advertising numbers coming in with the efforts that we are putting in.
Alok, hi there. I'll come to you in just a bit because we have lots to chat about for now. So, Alok, just wanted to get in a perspective. On the financial front, you have recorded multiple milestones in the quarter. It was the average, the highest ever average ticket prices and spends per head on a Y-to-date FY19 basis. Now, with the convenience fee deal that has been sewn up with Book My Show and Paytm, what is the outlook on your average ticket prices and your spends per head?
Well, let me just talk about the average ticket price. Our pricing strategy is based on a couple of factors, and one of them is the cost structure of the property and the paying propensity of the people. We ensure that we never outprice ourselves, and a customer who comes to that particular location can afford that ticket price. Our growth strategy is in line with inflation, so looking at a 3 to 4% growth Y on Y, and that's what our focus is, to ensure that people come, they can buy a movie ticket at a price which is convenient to them, and hence what we have done is we have got a flexi pricing, which means we have got different pricing strategies for different shows of the day and days of the week. So a patron can come and watch a movie at a price point which is affordable to him and convenient to him.
You know, I have to question you, Alok, on the latest news that's come out. You had Ronnie Screwvala filing a case with the Competition Commission against 4 multiplexes, including yours, asking them to intervene for charging the VPF, or the virtual print fee, which was about 20,000 rupees a screen when a producer or a film studio releases their films through the digital service provider. Is there any response from your end? Are the multiplex chains going to take any legal recourse on this matter?
Well, I would not like to comment on this because these are just press reports which we are hearing. We have got no notice from anyone, and these are just press reports. So I really will not be able to comment on it as we speak.
Competition from OTT players who are upping their offerings with, pricing competitively, and massive proliferation as well of OTTs now leading to a reduction of the time window of films on their platforms. I mean, is that a big concern?
Well, I always say that we Indians love our movies, and for us watching a movie is a social affair. We go out to watch movies with family and friends, and OTT in India, I would say, still a lot of time to catch on, and even where OTT is present in more developed countries, the box office collections are increasing year on year. Let me point out that the content which you consume on an OTT is totally different from what you consume in a cinema hall. The movies which you see on an OTT have already lived their life on a screen, on a giant screen, and hence are now being shown on the OTT platform. The true connoisseur of a movie has already seen it. Nobody will wait for a movie for about 6 to 8 to 10 weeks for it to be seen on the OTT platform. I feel that in India going forward, and historically, as I always keep on saying, that watching a movie is in a DNA, that will never go out of style. We will continue watching movies on the big screen, and we at INOX have really pampered our guests. So we have pampered our guests by giving him the best of food, by offering the best of service and the best of luxury.
Okay, in the past 6-7 quarters, your market share in the top 5 box office collections has improved with movies like Simba, Uri, Gully Boy, Manikarnika, as well as Captain Marvel, etc. What is the outlook on box office collections?
Again, we have got a great exciting lineup. If I can just talk about some short-term movies which are coming in the near term, or I can think about Kesari, which is coming in. We have got Kalank, we have got Avengers. There's a great lineup of regional movies, whether it's Telugu, Tamil, Bengali or Marathi. There's a great lineup for kids movies also, How to Train Your Dragon and Aladdin, so people are waiting for it. So the lineup for FY 19-20 looks very, very exciting. Going forward, people are experimenting with new storylines. We have got new genres coming out. There's a new set of directors, and even the audience has changed today. What I feel today, the star is the content. If the content is not good, nobody comes in. And we all know that a great content leads to footfalls, which subsequently leads to great box office collections. And I'm very bullish about this coming year, and I'm hopeful it'll do wonders at the box office. The entire film industry will grow a lot.
So finally, Alok, is there some sort of a strategy in place? Do you plan to expand the businesses by acquiring smaller multiplex chains? Any guidance that you can share with us on your revenue and capex?
Well, INOX was the first player which acquired another company way back in 2006-2007. That was CCPL of West Bengal. After that, we acquired Fame India Limited, which was a public listed company. And more recently, in 2014 end, the Satyam Cineplexes of Delhi. We are open to any organic expansion. As I just said, that we have more than 840 screens signed. And looking at inorganic, we have already done 3 acquisitions. And if there's a good chain which is available, why not? But as of now, we are just concentrating on our organic expansion.
All right, thanks very much then for joining in and giving us a heads up as to how things are shaping up, competition, new film releases as well. It all sounds very exciting, and as I said, analysts as well are